Hello traders, this is Rich from Tradesight. This is our market preview for the coming session. This is going to be for Thursday, August 1st, 2013. Well, today was Fed day, and when all was said and done, we were lower on the day across the board to a very small degree. The market internals were not terrific. They were up a little bit, which was as far as the advanced declines, which was in conflict with the lower prices overall, but really didn't move the needle either way in any significant direction today. Here's a look at the ES futures, which pushed above the 8/8 level, but we're not able to take it out. We didn't really build on anything we had going here so far today. So up until this point anyway. So right now we're really just basically stuck inside this trading range. Keep in mind that oftentimes the real move after a Fed meeting doesn't come until the following session is not really revealed during that session. So hopefully we'll get something to trade tomorrow when folks get back to business after the Fed meeting. Here's a look at the NQ futures. NQ futures were more interesting for a couple of different reasons. First of all, we had this push to the upside here that was rejected. We closed down on the day, and not only did we close down on the day, but we closed below the day's open, which makes for a short-term camouflage sell signal here. Also, the NQ futures also recorded another day up in the secret countdown phase, getting as far as day 11. So possibly within 2 more days we could have our secret exhaustion warning on the NQ futures, which would be a very, very notable development, especially since if we scroll back here to the beginning of the year, it would be the first one of the entire year. As you can see, we've had no countdowns that have completed, so that would be the first one, and that would be a very notable event for 2013 here. One other small little thing to keep in mind here, we're potentially 3 days into a very, very powerful pattern here. We'll have to see how this plays out to see if we get that trend termination candle to form, but it's still a little bit early to call, but we'll have to see if we can we can set that up, and if that does happen with the 13 exhaustion, we will definitely alert you to that. All right, now here's a look at the TLTs on the day. The TLTs are always worth reviewing, especially on and around the Fed days. We opened at range low here on the day. We opened at a new low on the move. We broke the risk line to the downside, but we wound up closing up on the day, and actually this could be potentially a key reversal day. Had some volume here, definitely the better volume of the last few days. We're just a little bit below the 10 EMA. And certainly here, by looking at this, you can't argue that the 10 EMAs are not important. We went up right to that level intraday, stalled, but still closed very, very positively on the day. Okay, let's drill down to some of the very important internals. The New York trend today closed at 1.24, which intraday is a fairly bearish reading. But keep in mind that the trend is a contraindicator. So what this did was it actually reversed and elevated our 10-day average. We're getting down towards that 0.85 reversal threshold. And what that reading did was pivot this back to the upside here. So now we're moving away from getting that overbought reading in the market, which is kind of frustrating for the bears, but it's definitely important and something for the bulls to point to, that the consolidation area could break out to the upside and become unimpeded by that initial resistance by the market having spent too much energy to do so. If this gets back to the median point here over the next couple of sessions here, that'll be very, very positive for the bulls, because that'll keep the 10-day trend from getting that overbought reading and reload it with some energy to the upside. Now remember, the 10-day trend here is essentially just a gas gauge, just showing how much gas the tank might have in it either way. So if we're moving back towards neutral, it's basically just reloading the market with potential energy. And of course, that's welcomed by all real traders. All right, the other key internal measurement here is the 10-day. The cumulative advanced decline line. Cumulative advanced decline line on the New York side is still struggling. Can't really get above our key trend line. The trend channel here on the Nasdaq side is definitely still in play, and you can see how we're just barely holding on to the lower level of it. and that's really, really important. We did have some very modest positive advanced declines, so don't underestimate the power of that, but holding the advanced decline line up. If this starts to roll over on the NASDAQ side, that'd be very, very bearish. All right, so here's the NDX versus the S&P. You can see the S&P is just paralyzed right here. I think that's the best interpretation of it. Right now, can't really get anything going. NASDAQ side, though, is trying to push higher. We did just record a very new nominal high here, and that's definitely a positive thing for the bulls to take a look at, and very, very important that that this keeps going. NASDAQ, when it's leading the broad market, is a very powerful event, very powerful thing. If this does fail, though, since we haven't gotten much haven't gotten much of a push above the previous high, all bets are off. But if we do get some follow through, that's going to be very, very notable, and we'll definitely be taking a look at this again tomorrow evening to see if we can build on this here with the overall market. All right, so here's a look at our individual sectors ranked from worst at the bottom to best up at the top of the list. Housing sector, top gun. Oil bounced back. The oil services were higher on the day. The banking index definitely put on a much better performance than the overall market. The laggers, computer hardware by far. Telecom, utilities, and then the gold and silver were also pretty far down on the list here. So we definitely had a kind of a return here to some of the late cycle plays that can really power a market higher even after it's already made a substantial move. So these are things that the market can build on. If we can continue to see the transportations come on strongly, the housing sector, and the oil services, that would be very, very welcome for the market. One thing we want to make sure we keep an eye on are the transports. Transports were a little bit better than the market, and if these can come on, this is exactly where you want to focus your attention for the rest of the summer. Here's a look at the HGX, which represents the housing sector. We're definitely positive on the day here. Didn't really take out the 10 EMA. If we do take out the 10 EMA, we really have to make a charge here at the 50, since we're still below both of those. So this chart's still definitely short-term bearish, but definitely has the potential to pivot higher and change that trend. The oil services index is still holding above the 50 DMA, which keeps it intermediate term positive. We're still short-term negative because we're below that the 10 EMA. Notice how that 10 EMA came into play. It was exactly today's high. If we take out the 10 EMA, there's going to be a trade there tomorrow with a push up to that 265.5 area, up to that 8 ace level on the Murray math box. We'll take a look at the computer hardware index. We've really just been struggling here, going sideways at the 7 ace level. We haven't lost and broken and followed through yet below the 10 EMA, so the chart remains positive in all time frames for now. If we do pivot higher, this 8 ace level at 437.5 is going to come into play, and the first legitimate support is going to be the 50 DMA. There's going to be a little bit higher than that when we come to interact with this prior high, but the real support is going to be the 50, which coincides with that 6 ace level on the Murray math box. XAU was kind of the whipping boy again today. Did hold above the 10 EMA, which is a coup for the bulls, and also the 50, so we still remain trapped in this trading range. Once this trading range does resolve itself, we definitely want to make sure that we embrace that move and go with it. This could be a nice little move here, either back down to the lows at 87.50 in this area, or push back up into these highs just below this 112.50 area. Oil on the day was certainly better than it's been trading in the last few days. Had a pretty strong update. It took the settlement right up to the 10 EMA. So potential here for a reversal back to the upside. This seeker count is still very immature. We're only 5 days up here. For now, the chart's still short-term bearish with the target of 4 ace at the 100 level. But if this proves to be just kind of a little recharge and a refresh, the 7 ace level at 109.375 is in play, and then 8 ace at 112.50 will come in next. Gold futures on the day pretty much look like the XAU, still holding above the 10 EMA, right in this area. Obvious levels above are this static trend line, and to the downside, this 1250 area should be very important and key support. All right, folks. As always, thanks for listening. This has been Rich for Tradesight. Don't forget that tomorrow is the first day of a new month. Could see a gap in the morning and also see some early money flows. First day of the month, so be sure you're aware of that when you start your business tomorrow morning. And we hope to see you again soon.